There's a fair bit of light there. Solar radiation, there you go. Look, thank you for the opportunity for speaking this afternoon. I don't know about you, but I find the afternoon sessions can be quite taxing, so I want everyone to stand up. Everyone stand up. Okay, close your eyes. I won't do anything naughty or rude. And shake your hands. All right, shake them really vigorously. That's it. Good. Okay, you can sit down now. That's what I was going to do. So I just wanted to get the glucose levels up a bit and so on, so you don't fall asleep. So yeah, I don't know. I won't make sure I won't be boring. So, all right. Look, thanks for the opportunity. The sponsors are the organisers of this summit. So I just want to talk about Nearstar and its perspectives in the national electricity market. So we operate two very large smelters, one in Hobart, Tasmania, and one in South Australia on the Spencer Gulf, Nearstar Port Pirie. So we aren't a mine, but we're a large energy-intensive business in the national electricity market. So I've got some slides here. I'm not going to dwell upon, I think they've split it up into a little bit of an overview of who Nearstar is if you don't know who they are, a little bit about Nearstar Australia, and I'll get into a little bit of a history lesson, and then some of the opportunities and the experiences that we've had. Okay. So that's just a bit of an agenda. So I'll just summarise that. So who Nearstar is, look, we're a large zinc smelting organisation. It's actually zinc and lead. Globally, we produce over 1 million tonnes a year of refined zinc and probably about 200,000 tonnes of lead, refined lead. We're also a very large silver producer. We're a copper producer. We also make gold as well. And we make some minor metals like indium, some germanium concentrates, etc. We're an integrated mining smelting business. We've actually divested a lot of our South American mines over the last 2 years. So we only have the North American mining footprint now in our portfolio. You can see the geographic spread there. We've got the two smelters in Australia. We have two large smelters in Europe, one in Belgium, one in Holland. We've got two mid-sized smelters, one in France and one in Tennessee as well. So you can see we're fairly geographically diversified. We don't have anything in Africa or the sort of other emerging markets in terms of the smelting footprint. But yeah, look, we're over 1 million tonnes a year of zinc. Our next competitor is Korea Zinc, who have the Sun Metals refinery in Townsville. Okay, we're a large employer. We employ in Australia probably over 1,400 people, direct employees. Our products, like I said, we're a large zinc producer. Half the world's zinc goes into galvanising steel, and obviously some zinc goes into die-cast alloys and other specialty products. Lead, the principal. We're also a large lead producer. Our biggest competitor in China. They pretty much dominate the industry in zinc and lead. And so most of the lead goes into lead-acid batteries for vehicles and e-bikes and medium-sized batteries as well. So other products, we produce a lot of sulfuric acid, well over 1 million tonnes globally. We're a large silver producer, I've mentioned that, copper, and some gold as well, and indium metal. We actually refine indium metal in our smelter in France. Some fast facts. I think I've mentioned the principal products for Nearstar Hobart and Nearstar Port Pirie. So we, in terms of technology, at the Hobart flow sheets, pretty much hydrometallurgical and also some pyrometallurgical at the front end. So it's a standard conventional roast leach electro-in flow sheet, which is the global standard and also the global best practice in terms of energy efficiency for that process. For Port Pirie, it's pretty much all pyrometallurgical. So we've just completed the redevelopment of the Port Pirie smelter at many hundreds of millions of dollars, and we're actually in the process of commissioning the new furnace, which is based on TSL technology, so top submerged lance technology. We have a blast furnace, conventional blast furnace, and a slag fumer as well. So that's the principal core part of the process. We also run a small SXEW copper plant as well. So capacity for the Hobart smelter, nominal sort of nameplate capacity is 300,000 tonnes of zinc, cathode zinc, and for Near Start Port Pirie, it's nominal, it's 250 plus a lead bullion. I mentioned about the employees. We're a very large regional employer, so 1,400 employees direct, many more thousands indirect. We've done a lot of economic studies, and there are many thousands that actually are indirectly employed through the operations of the smelter. Direct operating costs, so you can see very large expenditures, 170 million for Hobart and 290 for Port Pirie. Energy for the region is about almost $180 million in energy per annum, so it's a significant spend. You can see energy is a big ticket item for Near Star in Australia. So this is just a bit of an aerial view of the Port Pirie smelter, which is on the Spencer Gulf in South Australia. You can see that white tall building, that's the new furnace, the TSL furnace. It's a nice white building, our white knight. So we're commissioning that as we speak, and it seems to be going well. So that's the flow sheet. Look at Port Pirie. I'm not going to dwell upon that. The key point here is that it's with pyrometallurgical operations, there is a lot of internal recycles, and you can actually extract maximum value. That's the whole point of the Port Pirie business, is to maximise the unpaid value in our raw materials that come in through the concentrates. There are also recycles within the group, so the Near Star Hobart smelter and the Near Star Port Pirie smelter are integrated. We actually send intermediates from Near Star Hobart to Port Pirie, where we recover the value out of those intermediates as well. So that's the whole logic of the economic proposition of the upgrade. It's all about free metal, increasing the free metal in the business. So this is now Hobart, and by the way, the Port Pirie site is actually over 125 years old. So it's a testament to the generations before that that had the foresight, but also over many decades that we still managed to operate that site. The Near Star Hobart site. So there's just an aerial view. It's quite a sprawling site. It's located in Lutana. We have our residents pretty much very close on our doorstep, actually. So environmental performance and sustainability is important, making sure we operate the smelter as we intend to, with due respect to our neighbours. So it's a pretty important objective for the site. So it's a massive site. It's very old. It's 100 years old. Obviously, it's been upgraded over the years. The right there, you can see that's the sort of front end. We run 2 fluidised bed reactors that bring in the zinc concentrate that we roast, and then we've got 2 acid plants, and then after that it goes through a leaching process, purification, and the electrowind process, where we use all the energy. The Hobart site, pretty much, I'll get to the energy facts in a minute. That's the flow sheet, standard roast, leach, electrowind, so I won't dwell upon that. The key point there is the intermediates. There's a lead intermediate and an iron residue as well that are co-treated at our Port Pirie smelter, so we ship that to Port Pirie for reprocessing. These are the energy facts. So electricity, we're 1.2 terawatt hours at Near Star Hobart, so just under around 157 megawatts MD. We've got plans to go up to 170, an MD of 170, so we're looking at expanding further in the future. Incremental expansions, these are. And Near Star Port Pirie, so obviously we're in the Tasmanian region there, which is all most predominantly baseload hydro and some imported electricity from the Victorian region. Near-Star Port Pirie, obviously smaller, 40 and an MMD of 46 megawatts, 270 gigawatt hours a year approximately. We're not fully ramped up yet, so we're expecting that will probably go up a little bit more, but not much more than that. Large gas user, particularly at Port Pirie, and we're also we use coke and coal in our process as well, and we use coal for thermal, for heating effectively in the furnaces, and coke as the reductant in the blast furnace. Those coal numbers will probably go up because of the new furnace, but probably not much more than that. Okay, so in terms of sort of what we've seen in terms of Near-Star, we've certainly over the last many years, we've actually seen an erosion of the international competitiveness of energy. Now, it's irrelevant to compare Near-Star to a producer in Victoria or New South Wales. It's actually irrelevant. All our competitors are offshore. So China, Europe, South America, that's where our competitors are. So the benchmark you've got to do is actually what is going on in those regions. So I've actually produced there, so I've taken Victorian, the current futures prices, converted them into euros. These are all European, I've got the European benchmarks here. You've got South Australia there, which is leading the way, unfortunately, for the wrong reasons. So I've got futures prices for 2019, 2020, 2021. So you can see that even though we've seen some reductions, I guess, in Victoria and South Australia in 2019, they're actually still at historically high levels. Traditionally, and what we've seen historically is that Australian energy prices were significantly below European prices. And now, the last few years, we've seen the opposite of that. Norway is obviously a standout there, and you probably know the reasons why. They have significant hydro base load. So the worry, I think, is certainly for the concern for Near-Star is that trend's not is not ideal, and it's not sustainable for a large energy user. I'll just move on. So this is some data from Wood Mackenzie, who do a lot of benchmarking for zinc, but also other base metals as well. This looks at total net energy cost in terms of cents per pound of refined zinc by country. So you can see, look where Australia is. You've got some regions that are far better in terms of the energy productivity, for another word, and the cost competitiveness of that energy. So look, Australia's ranked, I guess in Australia it's really Sun Metals and Near-Star here in that data set. But look, it's not, even though it's not we're not at the end of that cost curve, it's not the great position either. Given that we were once well and truly had competitive advantage in that area, it's not a great position. You can easily move backwards as well. So China, you can see where China positioned, Brazil, Canada. There are other regions that are far more competitive, and that's why my point before is that we're competing against those countries and those smelters. So this is for zinc smelters in those regions. That's the important point. Okay, this is a bit of a sad story, I think, and it sort of captures the discussions we had on policy and policy failure in Australia. This is the regional spot price in South Australia over the last many years, since 1999, since the NEM was formed, and you can see that the policy has been a bit of a debacle actually when you look at that curve. There are periods obviously where we had a lot more stability. It was highly competitive prices. And then sort of after the carbon tax, even at the carbon tax years, we had lower prices than where we see it today by a long mile. So I think, I don't want to lay blame, but I think, the three amigos, the federal government, COAG and the AEMC have a lot to answer for with this sort of trend that we've seen. This is just some other, these are now swap prices, so contract prices for South Australia and Victoria. You can see we had some record prices in South Australia last year for this year. Look, the curves on the right there, on the right-hand side, we've seen a reduction in contract prices. So they have come off. They probably, there's an argument that they did overshoot. But look, they've come back. But over the last few days, they've also shot up again as well. So that we're seeing volatility in the contracts market. The sentiment, has, it will change, and it is volatile as well. But at those prices, they are still too high. That's my point there. For a large user like Neostar, I put Victoria in there because it's the most liquid region in them. Okay, the market is in backwardation at the moment. We're seeing much higher spot prices than contract prices since the closure of Hazelwood Power Station in Victoria. So these are monthly spot data for both regions, Victoria and South Australia, since going back the last few years. You can see that there was a massive uptick in very extreme bullishness when Northern Power Station went and then Hazelwood. There's been some retracement, like I said, but when you look at this, when you look at that, that's more of a longer term perspective. When you look at, this is a shorter term perspective, which is the last few months of this year and also late last year. This just shows a momentum indicator in the market, which is really MACD, which is described how bullish and how bearish the market is. You can see there's more bullish momentum with those crossover points. I've got those arrows. There's more bullish momentum in South Australia that we're seeing. So the volatility is there. Okay, it hasn't disappeared. Even though contract prices have come down a bit, there is still volatility there, which is a worry. It means that contract markets can react to that volatility. And we're seeing that at the moment in the short-term trading market, in the gas markets across the country. We're seeing gas prices up to $10, $12, $14 again. So that's playing out into the electricity market as well. So that's actually not good news for users. Now, challenges. So this is the sort of, I'm getting to the key part of the presentation. That was a bit of sort of historical perspective and just our views. Gas commodity has been, look, it's been a bit of a train wreck, I think, on the East Coast. Look, we have seen, prices increase 300% or more in some cases compared to our historical pricing. And we know the reasons for that. It's a little bit bizarre that we're seeing now discussions, there's two proposals, I believe, on the East Coast of importing LNG, potentially from WA, which we find actually, Neostar certainly finds quite bewildering, actually. And I think the key that needs to happen here is need to get more gas molecules out of the ground, which is really all about the moratoria that we have on the East Coast states. So gas is a problem. Even at $7, that's still too high. We're a large gas user, and that just plays out into the electricity market. So that's not ideal. Network pricing, we've seen massive investment in networks in the Tasmanian region, also within South Australia as well. Huge investment. I mean, the regulatory asset bases on these businesses have ballooned to the point where their equity returns are just extraordinary, actually, compared to a business like ours. It's many multiples in terms of their profitability on an equity basis. So to sum it up, I mean, network pricing is uncompetitive for a large user like us. We actually seen our network charges more than double over the last decade. And we provide a lot of grid stability benefits because of our flat load, but yet we're seeing these increased costs. Look, we've seen some softening, I guess, in terms of prices, but they're still at historical levels, and compared to our sister smelters in Europe, they are way too high. The supply side, look, I've spoken a little bit about that with, look, there's greater intermittent generation. I'm not saying it's good or bad, but it's creating challenges in terms of, the economics of existing thermal generation and stability in the market as well. So there is volatility, and there's increased volatility that we've seen compared to the last 5 years. The other significant thing that's going to happen is a change from 30-minute trading interval to a 5-minute trading interval from 2021. We were quite shocked, actually, Neostar, that the AEMC did not do any quantitative analysis on this. It was more qualitative, and it'll be the only market in the world that's gone from 30 minutes to 5 minutes, so we're a bit of a guinea pig there. I guess the worry is how it'll impact on financial markets, and particularly in derivatives, in the market. Neg, I've got a separate slide for that, and I'll just like to go on that now. I won't go through. I think this is just a schematic of the concept of the neg around dispatchability, or the reliability obligation and the emission obligation. Now, the neg, look, look, as I said before, like over the last decade or more, we actually haven't had coherent energy policy. There's been an energy policy vacuum. The neg tries to close that gap, but I guess our question is certainly near Star, will it work, and will it be the lowest cost? They're the key issues. You know, there are other issues there, and I've listed there in terms of, as an EITE, so that's emission intensive trade exposed, we will be exempt from the emission obligation, which is good, but for how long? I mean, these things, when they're in legislation, they can be reviewed and they can be unwound as well. So that's the first thing. Look, there are other issues as well, probably the key ones around, we're not so concerned whether, you know, our retailer's liable or we're liable. I think that's probably an immaterial issue. I think the key is that the reliability obligation, that it doesn't impose, you know, I guess, significant costs. And the other thing is that the market power, I guess, we have very large generations that have a lot of market power on the eastern seaboard. How will that market power be used if the reliability obligation was triggered? I guess the other key point with a neg is it's all based on forecasts. There's a T- 3 years view where there'll be a forecast of whether there's a reliability shortfall, and then there'll be a T-1. The question that we've got is that EMO, I guess, you know, we're providing forecasts, but EMO's forecasts aren't perfect either. So there's some concern, I guess, from our perspective and how that you know, the forecasting process will work and how efficient will it be and accurate. So, but look, I think the other key point is that there's been one attempt at modelling the neg and the impact on the wholesale market, but that was done at a very early stage. There wasn't any design principles at the time, and to my knowledge, I don't believe there's been any update in modelling. So that's another concern, that we're making big policy decisions without any proper quantitative analysis or modelling and risk assessment. So that's the neg. Now, opportunities. Look, Near Star, I won't talk about Near Star Hobart much here because effectively we're in the regions that's predominantly renewable, although we do import, they import across Basslink, the interconnector, brown coal from time to time, and we have a gas-fired generator up in the Tamar Valley as well. So I won't so much talk about Near Star Hobart here, but look, Near Star Port Pirie has some very good locational advantages, mostly around solar and wind on the Spencer Gulf there. So from a generation perspective, renewables, you know, there's an abundant resource there in terms of solar and wind. Look, we've looked at a feasibility study into a solar plant. Not, I guess it's complex, I won't go into details, but it wasn't technically behind the meter. But anyway, putting that aside, the issue, we've also looked at other technologies as well, and I won't go into a lot of detail on those, but there's a range of different technologies with storage technologies as well. We've looked at those. We did commission a feasibility study, a detailed feasibility study and an economic analysis on one particular option, the 80 megawatt solar plant. But look, in the end, as a large user, you really do need a firm arrangement. So when people quote PPAs and bundled PPAs, it's got to be very clear that is it firm or non-firm? So the firm PPA prices that we saw, it just didn't do it for us. When you put the overlay of international competitiveness and where we've been historically, we actually believed it was actually not that attractive proposition at the moment. Okay, I'll say at the moment. Look, the tenor's an issue. The swap curve, where it is at the moment, it's deflating a little bit or retracing. Counterparty credit risk, technology risk, execution risk, degree of firmness, policy changes in the market, etc., makes long term, I'm saying greater than 5 years, you know, or even longer, it actually is quite risky when you actually weigh all that up in terms of your directional view of the market, and we've got a directional view of the market. It actually is quite a risky proposition. The other, so and as I just sum up there, look, it is still too high. Even with that technology, we would need to see the technology costs acknowledge that they've come down. They would need to still fall further. It's just not that attractive for a large user like at Port Pirie. The other issue that we've got is there's a number of regulatory changes. You know, I've talked about the NEG. There's a rate of return guidelines review that's going on at the moment for the networks for the weighted average cost of capital and the parameters around the capital asset pricing model. So we're engaged in that. We want to see quite a big move with the AER that hopefully will move in the right direction, that we don't sort of over-reward the network companies. That's our view, that we believe they've been over-rewarded over many years. There's a number of transmission revenue resets in South Australia and Tasmania as well. Gas market reforms, capacity trading in the gas market. They're all opportunities for us to, we're a large user, so we've got some clout as well in those discussions and representations as well. Interestingly, we spoke about hydrogen before. We have had discussions with one party, one proponent, which is considering hydrogen electrolyser. We're a very large user of oxygen. We actually have the mother of all oxygen plants at Port Pirie, which feeds our new process. So we're a large user. But look, the hydrogen, using renewable energy for hydrogen electrolysis is an interesting application because of the oxygen, because it's potentially there's a very low cost oxygen alternative, but also the hydrogen as well, particularly as a reductant. And that's probably a lot more research is required, but we use a lot of coke in our blast furnace, and whether hydrogen is a suitable displacement or partial displacement is an interesting question. But that's longer term into the future, but it is something that we've had some preliminary discussions. The other big thing this is for Tasmania, is that there's some discussions on a second interconnector, and Tasmania being the battery of the nation with increased pumped hydro storage. That could end up being the energy nirvana. If significant renewable generation is built, and then Tasmania becomes an exporter to Victoria and the NEM. That's probably, like I said, it's an energy nirvana. We will effectively almost be replicating Norwegian-type prices, contract prices there. I guess the but is, who's going to finance it? Because these are well over $1 billion investments, and how will it be financed? And what's the economic model? Is it regulated or unregulated? That has quite strong bearing on the overall economics and whether there's a net benefit to the market and users as well. Finally, just a couple other points. We, as I said before, we have pyrometallurgical operations, exothermic reactions. So we're a net generator of waste heat. We've actually studied a number of waste heat to power. Done a couple of feasibility study actually with Energy Developments Limited. We noticed there at the conference as well. Between the two sites, we've got combined 12 megawatts of waste heat. But the issue that we've got is whether Nearstar funds it, because we have capex rationing and project attractiveness versus other internal growth and just sustaining projects as well. It just hasn't got up. Even looking at alternative ways to finance it, through a build own operate model and other ways, it won't stack up compared to other options. So unfortunately, we do have latent waste heat that we can harness, but the policy landscape. Look, the ERF, there is a mechanism to try to help there, but look, it's deficient. The ERF is nothing. I mean, we're talking about nearly $40 million of capital here, so the ERF is not going to help. So that's an opportunity, but we see that there's a big barrier in the moment in the policy of incentivising those sort of latent projects. And finally, I won't talk about this in detail, but look, our loads are unique, particularly the Hobart site. That can give us all sorts of capabilities to optimise our costs, but so that's another thing, is just using the uniqueness of our loads as well. So that's the other opportunity that we'll continue to do in the future. That's it. Thank you. So any questions? All done. Oh, we've got one here. Yep.
question from the audience, and then we'll encourage you to catch up with Greg during the break as well.
A flat battery.
Greg, I'll just stand up if everyone can hear me. The question really relates... Vincent Algar, AVL. The question really relates to at what point, given that you got international operations and your concentrate that you move around is fairly got good value, at what point do you decide you don't want to be in Australia?
Look, it's a good question. I think we will be in Australia here because we've actually made some significant investments that are irreversible. Particularly, in South Australia, we've made some significant investments. So we have to deal with that. I think exit with smelters, exit is significantly expensive. So it's better to operate and manage these issues that I've sort of described. And look, we've been here for many decades, well over 100 years. The landscape, it's a good question, but I believe that Nyrstar's got a future in Australia. We've made significant investments. We're not planning to exit anytime soon. But at what point? Look, it really depends on policy, how the NEG, because one of the key things that we're seeing in the market, there's Liddell coming out in 2022, your Lorne Power Station Victoria will probably come out in 2026, 2027, and there's a whole fleet of other coal-fired generation. It is very uncertain with the amount of renewables coming in, technology. We don't know what that market will look like in 10 years. We hope it's not going to be, like what we've seen. But if it becomes worse, if we simulate what we've actually seen, then that will be a problem, I guess, in future decades. But it's a difficult question. We just need to see how the NEG will... Look, NEG's quite a significant policy. It's not the only policy. Gas is a big issue as well, which interplays with the electricity market. But NEG will be a key one because it's designed to ensure reliability. Okay? So if you have reliability, the logic is that should flow through in containing prices at least. I don't know about reducing prices. That's why my comment is that it's quite dubious, the modelling that we've seen in whether it will actually reduce prices. It actually might increase prices slightly. But if it contains prices, that's at least ticks the first box. Now, whether it reduces prices, that remains to be seen. We just don't know.